Hi, Warriors. It's Dale Pinker to TradeGATEHub. We're sponsored and powered by TradeView Markets. Check them out, open a demo. I want to start off this week with the British pound after the big rally that Euro, Pound, Aussie had last week with the more benign CPI. The pound led this whole rally in the dollar. Okay, led it all the way up. It was the first one to bottom prior to the Euro bottoming and outperformed all the way on the way up. So what leads on the way up could lead a correction. To me, when I look at this 4-hour chart, we were diverging up at 18 and a half. We could maybe try it again, even a shot above it. I don't think any higher than 120, but I would not have FOMO in shorting the dollar after what happened Friday. I'd wait for at least a correction. And in fact, I think that there is a possibility that the pound ends up correcting 61.8 of this whole advance that we had from 103.50, about 1,500 pips to 18 and a half. So 61.8 would be about 900 to 1,000, which could take us back down towards the 109 level in the coming weeks. So I'm looking for entries on the short side of the British pound last Friday. Hard to short, a strong close on Friday, but we're getting this indication that we're going to at least end up with some pullbacks. I want to show also very significant resistance in the euro dollar. Let me pull up a monthly and you'll see if you look all the way back left, you could see how this 103.50, 60 level was very important. And what did we do? Here's your daily. So we went right to it. And that was on Friday. So we're right at this major resistance level. I do think that the pound will underperform and euro pound will head higher during this pullback. So we'll see what happens. But this is not, in my view, a time to be getting long euro as well. Now, followers know I was very bearish US dollar yen. I certainly didn't think it would fall beneath 140 on the first break. But even the yen looks like we could have some kind of bounce. Ideally, a bounce towards 144 would be a level that I'd be looking for short positions, because even though the 10-year is up a little bit, I believe that we're on the verge of cracking this, and that long-term 10-year yields could fall all the way back towards the 3 handle. I'm sure there'll be milestones along the way, like prior highs at 350, which go back to last summer. But to me, it looks like the die might be cast on 10-year yields and the Aussie. So the Aussie had a nice rally. A lot of Ellioticians were looking for a wave forward, 66.60. Today, it's holding up the best. So I still wouldn't chase it. If I'm bullish Aussie, I'd wait for a pullback into this 65 and a half level over the next few days. And if we get back under 65, in fact, I think you're going to have some problems. Your first indication of the Aussie doing something wrong is going to be trading back under the 66.60 level, which was an Elliott wave target for the end of wave 4. So we overshot it, but back under 66.60 is going to make that count live again. Want to talk about something regarding the metals. Silver's fought its way back. And just like I showed you that major resistance that we had in euro at 103.50, I want you to take a look at this $22 level, which if you go even years back, these are 3-month bars. You can see how important the 22 level was right here, right here. Look at all the times it held it. So this 22 level is very important. In fact, last week when the silver was making new highs, we were diverging here. We could try it again. I know there's some people looking for 22.50, but I wouldn't have FOMO here. I know a lot of people are saying this is wave 3. And another reason I'd be cautious on the silver is the potential that we're bottoming in the gold silver ratio. We have a falling wedge We could go back down and test this wedge line again at 79 and silver would outperform for a few days. But if this formation plays out and it is valid, and your first sign would be getting back above 83, which was an important pivot, the breakout of this wedge is up here at 86. If that happens, what it means is an important underperformance of silver against gold. So I'd be careful about FOMO in silver as well. And that if we get this type of rally here, I would, just like the dollar, I'd be looking for pullbacks to buy the gold and the silver. I came up with what could be a scenario is you see the 200-day up here in gold is up around the 1800 level. And that was a prior high back here in August. So if gold's able to make it up to 1800, an ideal situation would be if we get this dollar rally for it to pull back and put in some type of right shoulder. Let me show you the weekly. So, you know, this would end up being a neckline up here at the 1800 level. And this would be a left shoulder. This would be a head, and we get a pull back into the breakout around 1680, this pivot. And then the next time over 1800, you're talking about your 2000 number. So I don't think you want to rush into anything right here. If you're bullish gold, and there are reasons to be bullish gold and silver, I still think that you are patient and wait for pullbacks, even if it goes higher for a while, a little bit longer. And you know what makes me think that there's a possibility of that happening is the S&Ps are approaching this 4,000 level, which is 61.8. And this has been a long talked about target, although I was looking for right before the CPI one more test of 36. Up here at 4050 to 4100s, major confluence of resistance here, and I think the S&Ps will at least stall there. I also wanted to show you copper, which is taking a major hit. So, I mean, if China's coming out of lockdowns, the copper is acting pretty strange. And in fact, down here, I talked about a rally back to 4. Well, you know, we almost got there, close enough for government work. I think we got up to 394, so missed it by about a nickel, which is even more bearish just because the euro got to resistance, copper didn't. So there's a possibility for a pullback here. And another interpretation of a weak dollar is, even though the market greeted it with bullishness, that it may imply weakness and that we could end up getting a growth scare, and maybe the market not benefiting much from rates dropping, but rates dropping out of the fact that we have a growth scare coming here in the US. So the theme of today is I believe that the pound has topped, or one more high would not confirm. I think there's a chance to, you know, if you're an investor, you just wait for the pullback to develop. If you're a trader, you may want to tactically try some shorts with, very manageable stops. And you want to be careful about FOMO and gold here, even though it might have another $20, $30 in it. Silver, this $22 area is very important. If we close over 22, then what I would do is wait for a pullback to 22 to buy it. Your first sign that silver's really doing something wrong would be to close back under this blue line and this moving average, which is, I believe, the 200-week moving average. Correct, it's at 2090, so there's a lot of confluence. You don't want to see silver back under 2090. Let's call it 2088, 2090. I think that could lead to another big drop and may be behind why this falling wedge in the gold silver ratio could be setting up, is that silver has a bigger fall than gold in the coming weeks. There is an old Wall Street saying that we could start thinking about in here, and that is that the bears feast on Thanksgiving. So, you know, we have about a week and a half till then. So there could at least be profit taking. you know what? Don't have FOMO and chase major moves like the pound from 103 to 118. Just be patient and wait for the next setup. In fact, great surfers do not try and catch every wave. They too wait for setups. So Mike will be with you guys in about an hour and a half. Remember, don't just count your pips, count your blessings. I have a great guest for us on Thursday, Helene Meisner, one of Mike's favorites on his curated Twitter list. And Mike and I'll be back with Mike tomorrow for our Tuesday macro outlook, and we'll see what's setting up for Turnaround Tuesday. Good hunting, everybody. I hope we're adding value to what you're trying to accomplish as a trader, and check out TradeView Markets and compare them to your broker. Adios, everyone.